Attendees are in
Hello
listen-only
guys,
mode.
my name is David Cross and this recording is one of the first recordings for my YouTube channel. I already placed under my channel video recording, which actually I did a while ago, like 6 months ago, and that time we were predicting a strong collapse in equity markets, and actually it happened like we expected. Again, brief information about me, what actually I do and what will be my targets in this channel. I'm a trader with experience of more than 10 years. I do a lot of consulting works for different trading platforms. So my target here will be to share with you some brief information about the market, about trading ideas, and actually to give you the trades which I take by myself. I will try to keep it very short. I do understand that nobody likes long videos, even by myself. When I see this kind of videos, I'm trying to skip most part of that. That's why in every session I will try to be very short. I will try to explain it in very brief way, and of course give you some fresh trade ideas. So today's date is 15th of May. It's the last trading day, and today we'll discuss with you the U.S. equity. So the U.S. equity markets, the active traders who trade in CFD or in other platforms, they are familiar with TradingView account, and we can see right now Nasdaq 100 or sometimes called US 100 live charts, candlestick charts, and we can see that after long rally, which lasted since 2009. I mean, after the recent crisis, welcome recession, Nasdaq has been increasing before it crashed for more than like 30%, and recently we can see Nasdaq has been rebounding and already rebounded right about, you can see 40.32% before going right to consolidation. Of course, the most popular question, which actually we are facing every day, is whether this recovery or will be sustainable, or whether this consolidation can be a preview about more stronger decline. So my target to will help you to get some ideas. So what actually happening with equity market and what we can expect next. So frankly speaking, if in all right to give answer right to this question, whether equity markets recovery will be sustainable, so we can break right this maximum levels or not. So we simply need to look at some data. First of all, if we look at the current market situation after coronavirus lockdowns, we can see the situation, economic situation of different countries, European countries, China, Japan, Australia, New Zealand, Canada, United States. So it's much more worse than we had during crisis of 2007 and 2009. Comparison, recently Bank of England made an announcement and expecting, despite some recovery for second half for the whole year, UK economy to shrink by 20%, or so. For the same expectation, we heard from Fed side, European Central Bank, the European Commission official forecast also claim a strong decline. We can see right, especially in French and German and Italy, and this is the reason after a few months of break, European Central Bank starts more aggressively applying quantitative easing program. Simply the central bank start printing easy money and buying right this way the junks in the market in order to help the corporation to survive, and of course somehow to avoid it. So now, if we look right at current situation, the rally which we see, Nasdaq recently mainly it was due to strong cash flow to equity markets. So, what does it mean? They're saying that after almost all central banks uh, cut the rates, I mean, because central banks have both credit and deposit rates. So when they're cutting credit rates, meantime, they cut the deposit rates. For some time, people were turning to bonds markets, or for some time people prefer to keep their money in cash. However, with the rest of developments after central banks announced again quantitative easing programs, right? For example, we see 2.2 trillion package by U.S. government, or over 200 billion pounds bond purchasing package by Bank of England, over 700 billion euro package by European Central Bank. We can go right further. We can add there Japan and so on. I mean, we had a fresh cash coming to equities, and actually it was the main reason why equity markets jumped. So what I'm trying to explain, the reason, what's Nasdaq? Nasdaq is a group of American stocks, so a group of American companies which make the economy. When these companies getting stronger, when they become more profitable, of course, stocks value rising. However, at the current time, if you look at the recent, earnings season, reports, they were a kind of disaster for equity markets, for companies, as a lot of companies downgraded their revenue forecasts for the future. Meantime, report very negative numbers. However, in return, we have seen Nasdaq's rising. So that's why my opinion is that this trend, which we see with Nasdaq, after some time, will enter to a very volatile period and will not be sustainable. So how we can get confirmation? Like I said, there are some assets which can be used as a preview of this kind of future moments. And one of the ways how we do this, we are analyzing inverse ETFs. So what's actually ETF? ETF is exchange traded funds. And it's a type of security that involves a collection of securities, such as stocks, that often track an underlying index, So it's kind of Nasdaq, but it's a private index, and it's traded also under organized markets. There are a lot of ETFs, and ETFs they considered to be one of the new ways of trading. Not every CFD company offering ETFs trading, but the platform which I'm cooperating, they offer ETF trading, and there are different ETFs. You can have ETFs tracking the oil market, for example, or you can have an ETF tracking, for example, biochemical or biotechnology companies. You can have a chemical tracking consumer discretionary sector, and so on. Because even there are ETFs which track the treasuries, which are less risky and very popular investment during the crisis. So now what we talk about inverse ETFs, or prepared, for example, inverse ETF for Nasdaq is QID, Pro Share Strat Ultra Short Triple Q ETF of CBOE, Chicago markets. And what we can see a formation of head and shoulder in this picture. We can see from our, now we'll try to highlight for you. We can see the left shoulder, we can see the head, we can see the right shoulder. As usual, how head and shoulder pattern works, they have a neckline, and when after the upward breakdown of the neckline, you have a new trend, and that's usually the trend should be about 70% of this distance from the neckline to the head. So what does it mean for us? It means that in current situation, if we are looking at QID, which is supposed to be the inverse ETF. I mean, inverse ETF for the Nasdaq. We can see it's already completed this down movement. So, frankly speaking, what we can see from the QID, we can see that QID is about to create a divergence. We can see, right, and also RSI, right, also moving, as we can see, to the bottom, at the bottom, and meantime, the MACD about to change direction, however, right, still didn't break above zero. So what we can expect, right, from QID, we can expect from the QID to rose back, which means, right, it can start, right, moving upwards. And here we are using EMA line for 100, it's moving exponential. So we can expect, right, at least, right, minimal rebound for about almost 30%. So what this 30%, right, can give us? So if QID moving 30% upwards based on inverse correlation with Nasdaq should move down for 2 times less, which means we can expect, right, Nasdaq to decline for about 15% approximately. And when we return back and checking, right, the Nasdaq, now we'll have a look. What we'll be able to see here, we can see again the EMA line, and minimum, right, we can expect a decline for 5 or 6%, but with 10% so far, we can come to the line, to the level, price level of 8,135. And if we're looking for technical analysis, so what actually can happen, or whether it's possible, right, to see Nasdaq dropping, this way down or not, and actually it's more than possible, because we can see that we have the first, right, the signs of the divergence. Right, we can see the graph is moving up. However, MACD, right, you can see the moves opposite direction. So frankly speaking, what I'm expecting from Nasdaq, based, right, on inverse ETF analysis, I'm expecting Nasdaq to drop, and you can use this phrase trade idea. For other US equities like Dow Jones, you can use UDOP Ultra Pro inverse. Again, you can see ETF, right, is about to rise. Or for S&P, you can use UPRO. It's also, right, ETF which tracks and have inverse correlation with S&P 500 indices. Of course, other ways that if you're scared of entering indices with high value, because indices as usual trade high value, and the companies as usually provide between 1 to 100 to 1 to 200 leverage, which of course, right, requires very strong money management. You can simply turn to ETF trading. Of course, the platform which I'm cooperating with, they offer this kind of ETFs. You can find, for example, UDOV. You can get trade information about UDOV. You can see investment, 6 daily investment result that correspond to 3 times the daily performance of Dow Jones Industrial. You can find a KFAX, the performance in the portfolio, right, what actually tracks Dow Jones Industrial Average, Dow Jones Industrial Average Swap Credits Used International, and so on. And of course, under this information, you can also find, right, the leverage which company offers. You can see the leverage can change here 1 to 1, but however, it can be increased to 1 to 20 under different conditions. So this is the trade idea which I'll give to you. If you need more information about ETFs, because we have various ETFs, for example, next time I'm planning to talk with you about XLY, which XLY is consumer discretionary ETF, which tracks the essential, products for the life. And we know that during this even pandemic, right, period, when we have lockdowns, people, right, still need this kind of products to survive. And of course, it's normal to see this kind of a rapid growth, in this sector. Because if you go again information, we'll understand what I mean. Because when you look at portfolio, XLY tracks Amazon, Home Depot, McDonald's, Nike, and others, which I think were the winners this period, of the lockdown period. Okay, guys, I will not take too much of your time. Follow my videos if you want to get updated in time. Just subscribe. If you like the videos, put like there. It will help me too much. I will try to make this kind of short video 2-3 times per week. See you again, and I wish you good luck, trade safe, with automations. Bye bye.